Well, hopefully you've seen my introduction video. And one of the things we did discuss in there real quick is about financial awareness. Understanding and know what the financials of your company is. This is key. Guys, understand the basics, and I'm going to go ahead and put some graphics up here. But you first need to know and understand, what is your revenue, also known as your income? How are you making money? What we're going to do first is we're going to go ahead and categorize that. You need to look at somewhere between 5 different revenue streams, maximum of 7. Now, depending on the type of business you're in, it will depend on if you have different revenue streams, but you definitely want to look at different ways that you make money. Second thing is COGS. That's cost of goods sold. Hey, that's anything that it directly takes to go ahead and perform how you made that revenue. Let's say, for instance, in construction, it's the labor that's out there on a particular job site and the materials you spent that directly went in there. Well, some people will say, well, what about the truck that's working on the construction? Well, there's actually something called either your variable COGS or your variable overhead, all depending on if you want to put it above your gross profit or below your gross profit. What I'm finding out is most larger national companies that are very successful actually go ahead and put it as a variable overhead. But here's the big thing, guys. We've talked about revenue. We've gone ahead and talked about COGS. These are things that you're going to want to go ahead and set up on your books. They're important. Now, we use QuickBooks. I've been using QuickBooks for years. Unfortunately, they just drove you off desktop and put you online. Kind of driving some of us old timers a little nuts. But let's get those revenue chart of accounts and let's go ahead and get those COGS chart of accounts. And the way that I'd recommend it doing, that when you have your COGS, they need to reflect your revenue. That way you can go ahead and see what line of revenue is profitable and which one possibly isn't. Now, after you've taken your revenue and subtracted out your COGS, you now have your gross profit. This is a key, very important number, because basically you're going to be driving your organization to a certain gross profit. Now, the hard part about revenue and COGS is it's variable. You might be seasonal, which means, hey, if you work only during the warm months, that means in the spring and summer, you're sitting there and your revenue goes way up. But during the winter, when it's nice and cold, you be inside maybe warming your buns, hey, your revenue's way down. Well, after your gross profit, you have your expenses. Some people call it your thief in the night. It's that thing that you have to pay every single month. One, and most importantly, is you got to pay for yourself. But then you have electric bills, you have rent, you have other employees, maybe you got an admin, an accountant, all these other things. They're bills that are going to be the same pretty much every single month. After your overhead, you then get down to your net operating income, okay? Now, in your overhead, you don't have your debt payments, you don't have your truck payments, you don't have your equipment payments. That comes afterwards. That's debt. We'll talk about debt in another video. But now you've got down to your net operating. I think today that's going to be it. But here's a big thing. Guys, if you're going to run your own company, maybe you were a plumber, maybe you were an electrician or some other technician, you were doing this on the weekends, and you decided to go out on your own, well, guess what? 30 to 40% of your life is now going to be doing the back office things. These things are key and important. You've got to get into the mindset. You got to get the discipline. If you don't get the discipline, you'll never know the health of your company. And I'll tell you, there's less than a 15% chance you're going to make it past 3 or 4 years. It's just a hard reality. Come join me for some more. Enjoy.